Welcome to TheoTrade. This is Don Kaufman, May 5th, 2021. 7 minutes to go to the cash close here on this Wednesday afternoon. The S&P futures are massively unchanged, but risk just continues to accumulate in the S&P 500. We will get into quite a bit of detail of that here momentarily. First and foremost, look at the S&Ps, look at the Nasdaq a little bit, and again, some of the broader markets before we get into detail of exactly how and why risk is kind of accumulating inside of the marketplace and what, more importantly, that means going forward. So as I was saying, the marketplace is relatively unchanged. A little bit of pressure into the Nasdaq. It's some chopped out and rather fast trade though. If we take a look at the S&P futures and we look at the volume, you know, we are doing over 1.2 million contracts, probably closer to 1.3 by the close, which is not exactly or incredibly light. I mean, listen, it's getting it done out there, but for a day that we're unchanged, again, it's some fast chopped out broken trade. The advanced decline line is for the most part a veritable slop fest. Yes, we have terminology for that, and this, people, that is most definitely a slop fest. Now, what's going on inside of the Nasdaq? The Nasdaq's actually down 0.3%, and you'd think to yourself, oh, let's not read into a 0.3% move inside of the Nasdaq. And I would actually agree with that statement. You know, I'm not gonna sit here and try to, read too deeply into this, but what I will take you into and what I think you should also look at is you're gonna look right now with me at a 30-day 1 hour chart. Again, a 30-day 1 hour chart. And what some people are actually missing is, yeah, we are finally seeing some sell side activity here. That bounce is unquestionably being sold into. And I'm just kind of tracing that on the screen with you here. Again, this is a 30-day 1 hour. Most recently, again, some sell side activity hitting the marketplace. We get this rip and bounce that happened, Tuesday into a little bit of Wednesday, but that is being sold late in this Wednesday session. And we definitely are looking, in the next day or two, possibly touching down and retesting through that 13,400. Now, push all of that aside. On Monday night's video, I talked expressly about Amazon, okay? Amazon is kind of paving the way lower inside of the Nasdaq, but when the rest of the marketplace isn't doing too much, Amazon's actually having an impact back upon the S&Ps as well. With that, there's also quite a bit of options activity the last couple of days inside of Amazon. Even after all of the earnings, again, when you start looking back at options activity, recognize Amazon had earnings again, of course, late last week. So why am I bringing that up in reference to the options activity? Because the options activity specific to Amazon, I mean, it's still doing some 300,000 contracts, and that's about 90% of what it has in the previous 5 trading sessions. You're like, oh, but it's only trading 90% of the volume. Yeah, but we just came off of its earnings, which means that this is relatively heavy size that's trading here. This is absolutely still on our radar screen. There has been nothing but sell side activity since that particular earnings announcement. People, that can put the nail in the coffin unto itself, specifically for the Nasdaq. With it, got to take a look at Facebook. The chart looks almost identical in terms of Amazon to Facebook. And if you do take a look specifically at Facebook, again, the sell side activity, not by any stretch of the imagination extreme. Nevertheless, on a percentage basis, is pretty much in line with Amazon. All right, let's push all of that aside for just a moment. And as we denoted a moment ago, risk kind of just continues to grow on the overall marketplace. So why are we saying that? Like, what inside of this marketplace is displaying that risk kind of continues to grow, and that, with this accumulation of risk, well, we're going to be getting ready for a very substantial move. This is something I was discussing quite extensively on this past weekend's update. In fact, I'm going to zoom into it. So first of all, what we're going to look at here inside of the SPX. The SPX, the mother of all products. I'm going to try to get this into scale right on your screen. So what you're looking at here is the expected move. Now, this week's expected move, this is the upper edge of the expected move, the lower edge of the expected move. Yesterday's trading session, we just got a hop, skip, and a jump away from the lower edge of the expected move. Okay, so the first thing I wanted to mention is something that I talk about each and every Wednesday, and that is getting to know your expected move. And that means ultimately that in this case, the expected move is about $67 for the entire week. So we're looking for this move that's supposed to be up 67 bucks or down $67. And people, we got close to it. Again, we missed the lower edge of the expected move by just a hop, skip, and a jump. Nevertheless, there is still, huge room for movement inside of this marketplace. Now, that's something that you should seriously think about for just the next 2 days of trade. Come Thursday, Friday. I mean, where are we this week? Well, we started the week at this central line. Again, this is the upper edge of the expected move, the lower edge of the expected move. That central line that, I'm writing on right now, that is where we ended like last Friday. So what have we done this week? Absolutely nothing. Which brings me precisely to the next point. What have we done the last couple of weeks? For the most part, you were looking at a level of 41.80. So here we are at 41.80. Where were we the previous week? I mean, the line, coming across your screen right now, yeah, that's 41.80. And we've now effectively been there. Well, you've got 1 week, you've got 2 weeks. You now basically have a third week of trade. Add just again a hop, skip, and a jump over here. The entire range, for almost a month of time. And I'm just going to actually position a range in here. The entire range for this period of time, there is the closing bell. The entire range, though, for a period of almost a month, all we continue to do is accumulate more and more risk. Specifically, the central point of trade has been about 41.80. Now, that is a level specific to the SPX. If you take a look at the closing price now, inside of the SPX, here we are, 41.67. The ball of risk continues to grow. One of the most important things, and one of the aspects that I don't think too many traders kind of recognize, as time goes on, and this is what I was kind of going into a little bit of detail on the weekend update, but I'm going to go even further right now. As time progresses and trading firms and bona fide hedgers continue to trade, what occurs inside of a marketplace, is we start to lay down some groundwork for some options trades, and that means accumulation of open interest. So when I'm saying to you that the risk continues to accumulate in the marketplace, what happens in any given week is you start trading, and you're trading strikes inside of the SPX, and you're trading strikes right now. I mean, here, all the way back here at 416, you were trading strikes in the SPX right around the number of 41.80. What have we done since then? Just continue to accumulate more and more and more risk, to the point in which the amount of gamma risk that's positioned right around 41.80, that unto itself, it's incredibly dangerous, because at this point in time, and again, I know everybody wants me to put some directional bias in here, and I will, but at this point in time, you have to look at the marketplace as a little bit of a time bomb where it can explode higher, explode lower, because once this ball gets put into motion, every major trading firm has to dynamically hedge into it. They all do. So the moment you start to slip just a little lower, this will actually snowball out of control. We'll head down. We head a little bit higher, it'll actually just explode into a gamma squeeze to the upside. It is the single most important thing about this marketplace. And all people are doing right now, well, look at the MACDs on Amazon. Push it all aside. All you got to focus on right now is inside of the SPX, because the SPX, it's the mother of all products. Take a look at the SPX order flow. Yeah, 1.2 million contracts isn't going to lie to you. The volume is actually heavy. Forget about the number of puts that trade versus calls. That's normal. But the volume's not going to lie. It's 1.2 million contracts. And I say things start to kind of accumulate on a day-to-day basis. You start looking at like the Friday expiration. Look at the Friday expiration. Start opening up tons of strikes in here. People, the volume and open interest out there, it's phenomenal. Contract size is huge by huge. You start looking out just a little bit in time. You go even like some 15 days out. There are tens of thousands of contracts that have actually opened up inside of the SPX, and it's all right in this little realm. So all we know is that we've been trading in the exact same range now for almost a period of a month. In doing so, it accumulates risk. If you accumulate risk at that particular level, The moment we actually step off, we explode higher, explode lower. That's as far as we want to go. Now, to give a little bit of directional bias to that, in large part, I think the Nasdaq could have influence to this, okay? As I said to you guys a moment ago, and again, this is the directional bias portion of it. This is, I try to give you an objective and very quantitative view, if you will, of the SPX and why the SPX just kind of continues to kind of accumulate risk. You get stuck on a level like 4180 and the risk grows and the risk grows and the risk grows, and eventually you just literally rupture higher or lower. Now, again, that's the more quantitative, portion of me. The, if you will, the directional bias, Don, is looking at the Nasdaq, and the Nasdaq looks like it is obviously in a little bit of downward momentum at this point in time. If we take a look at the QQQ and you cruise over to auto expected moves, the QQQ is already outside the lower edge of the expected move. Coming into Thursday or Friday, things can get a little bit wicked in here because we already are outside the expected move. Keep it in mind, all right? So you have a little bit of a storm, kind of brewing in the marketplace. What I would look for, okay, and I'll be very, very clear about this, if we're going to go, if the S&Ps are going to make that big move, if the Nasdaq starts to slip to the downside, the only way the S&Ps are going with it, it's right here. It's the financials. The financials, they perform relatively well today. Those things are up 0.8%. They actually held the S&Ps higher. Financials are going to go. If the financials go, we're all going down. What that basically means, the market will actually go and snap back into a state of correlation instead of a veritable slop fest out there. And we could actually be rocking to the downside. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.